2025 is going to be the most buyer-friendly market that we've seen in a number of years. So if you've been waiting for mortgage rates to drop, inventory to increase, and overall affordability to improve, then 2025 might be the year that you've been waiting for. But here's the thing, not everyone will come out on top. In this video, we're diving into the top changes expected to happen in the 2025 housing market, including how shifting mortgage rates, buyer demand, and regional dynamics, basically where you're located in the country, could completely reshape your buying and or selling strategy. So make sure you stick around to figure out if 2025 is the year to make your move. In 20 years of selling real estate, the last couple of years have been probably the most difficult years in real estate that I've ever seen for buyers. And it really comes down to a couple of different factors that we were dealing with continuously since the pandemic. Tight inventory, interest rates continually moving up, while at the same time, affordability was going in the other direction. But if I'm being honest, I think 2025 is the year that a lot of this changes. Now, it's not going to be a buyer's market in the traditional sense, but it's going to be a more balanced market where both sellers and buyers are kind of on even playing field. Not one really has an advantage over another. And the primary reason for that is because I do think 2025 brings more inventory. I think we're going to see more homes continue to come to the market, which we've already started to see in a lot of markets out there. But what's really going to happen, what we're going to have is more and more sellers willing to get rid of those super low interest rates. A lot of these people have been sacrificing over the last couple of years. Yeah, I know sacrifice probably isn't the right word. They've been living in properties that didn't meet their needs for one reason or another. A lot of people bought homes during the pandemic that just didn't work, but they stayed put because of low housing payments. Because interest rates were so low, they were willing to sacrifice. They were willing to stay in properties that didn't work because there was so much craziness out there in the market. But I think 2025 is going to change that. I think a lot of sellers that have been sitting on the fence are now going to be willing to sell these properties. And the reason I say that is because I'm having conversations with clients that said they would never sell their property because of super low rates. They're now considering it because their homes no longer work. So I think that's probably something that's going to happen nationwide. So you're going to have more and more inventory coming to the market. Now, what I always like to point out in videos like this is real estate is local. So if you're in an area like Florida, Texas, Louisiana, some of these Sunbelt states in the South, well, they've already started to see inventory come into the market. So they're probably watching this going, Jeb, we've been seeing this for months. But here's the thing, the majority of the country has not been seeing this. In fact, at the time I'm filming this video, I believe only 11 states have reached pre-pandemic inventory, which means inventory back to 2019 levels, which means there's 39 states that haven't reached that level. Now, here's the thing. It's not all going to happen as soon as we start 2025, but this is typically a time of the year when we start to see more and more homes come to the market. And 2025 is not going to be any different. But here's the thing. Inventory alone isn't going to make a buyer's market, right? You need interest rates to improve. You need affordability to improve. And I think that's where we're going to see one of the biggest impacts in 2025. At least it's going to have the biggest impact on the housing market in 2025, and that is lower interest rates. Now, I've been a big proponent of interest rates moving down over the last couple of years, and in fact, I've been wrong. I thought we would continue to see interest rates move down, but rather what we've seen is interest rates move down and then they bounce back up. They've moved down, they've bounced back up. So over the last couple of years, we've seen interest rates average somewhere between 6.7 and 6.8% through the entire year. Now, during those periods of time, we saw interest rates sub 6% range. In times, we saw interest rates above 8%, which means we've had this really, really wide range. And part of the reason that we've had so much volatility in the market is because we've had economic data that hasn't really been going in a straight line. We've had inflation numbers improving and then all of a sudden they're not. We've had jobs numbers getting worse and then all of a sudden they're not. So there really has been no clear indications of where the economy is going, and that was creating turmoil within the bond market, which translated into volatility in mortgage rates. But here's the thing, we've started to finally get somewhat of a clear direction when it comes to where the economy is headed. And at the moment, it looks like we're headed for that soft landing, where inflation comes down, the job market remains stable, and the Fed gets to be slow and methodical in how they reduce rates. Now, I know what you're saying. At the moment, the Fed isn't predicted to really lower the Fed funds rate too much in 2025, which means we're not really going to see much lower rates. But here's the thing, the bond market typically gets ahead of the Fed. So while the Fed's out there waiting, if the economy starts showing signs of slowing further, which is likely to happen as we move into 2025, then you're likely to see the bond market improve. With that, we've also started to see the spread between the 30-year and the 10-year improve, which in and of itself is allowing mortgage rates to come down. Now, I'm not predicting 2025 to be super low interest rates by any means, but I do think we're going to have a yearly average lower than the last couple of years. I think we could see an average sub 6.5%, which means there's a chance that we see interest rates below 6% at some point this year, and there's a chance that we see interest rates about where they are. But one of the economists I like to follow a lot, Logan Montashami of Housing Wire, believes that we're going to have an interest rate range somewhere between 5.75 and 7.25%. So this is where I want to reach out to you. Where do you think interest rates are headed in 2025? Do me a favor and let me know in the comments. So if we have more inventory coming to the market and we have interest rates moving down, then there's a really good chance we're going to see an increase in buyer demand. And the reason I know this is because when we saw interest rates move down in the 6% range back in September, we not only saw purchase applications go up, we saw pending home sales go up, and that's because there's a lot of people sitting on the fence ready to make that move. They're either waiting for more inventory, they're waiting for improved affordability with lower rates, or better yet, they're just waiting for some stability in home prices, which is exactly what we've seen the second half of this year. Instead of seeing home prices continue to increase, we've really seen home prices stagnate more so than anything else. Now, we're still seeing year over year home price appreciation in nominal terms, but when we look at the real terms, we're kind of flat in some areas out there and slightly above growth in other areas. But my guess is 2025 looks a lot like 2024 when it comes to appreciation. You're going to have home prices move somewhere between 3 and 5% to the upside, which means if inflation stays where it is right now, there's a chance that you don't really see home price growth in real terms. Now, depending on where you're located in the country, you're going to see differences in how real estate is moving, kind of in a traditional sense. Now, the last couple of years, we've just seen real estate go gangbusters. But prior to the pandemic, there was normalization in markets, which means you had some markets kind of moving sideways, not really going up or down, or you had other markets trending up or trending down. And we're getting back to that. I think there's going to be a bigger disparity across the United States than we've seen in the last couple of years. And that's because some areas have seen a larger increase in inventory, and those markets are likely going to continue to increase in inventory. Now, some of these markets are seeing increases in inventory because of higher insurance, because of higher HOA fees, which, more homes coming to the market, not selling, which means inventory continues to grow. Now, in other areas of the country, like us here in Southern California, we've seen more of a normalization of the market. Some homes out there are still getting multiple offers, selling above the asking price. Other homes out there are sitting on the market, not getting any offers at all. And I truly believe we're likely to see more of that, right? Some markets doing really well while others aren't doing quite as well. So it's going to be really, really important to understand your local market. Don't just watch national real estate news. Find somebody in your market that understands your market and not just focused on one zip code in your market. They're looking at the entire market and can guide you through the process, can talk about inventory, talk about demand, because honestly, that will be a better guide for you than watching a channel like mine. But with that, I appreciate you watching. So if you found any value at all, do me a favor and hit that thumbs up. And if you want to stay updated on national news like this, forecast in the mortgage and real estate space, do me a favor and hit that subscribe button. So we've talked about how inventory is likely to increase. Interest rates are likely to move sideways to down for the most part. Buyer demand is likely to pick up. House prices are going to move sideways. So overall, you're going to have improving affordability. Now, it's not likely to feel like it's improving that much, but when compared to earlier in 2024 or even parts of 2023, you're going to have a lower housing payment, which is ultimately a really good thing for home buyers. So if you're a buyer out there and you think 2025 is your year to become a homeowner, I would start working on that now. I would start talking to a lender now. It's never too early to start the process, because if there's things you need to work on, like your credit score, maybe you need to save a little bit more down, or you need to do something that's actually controllable, you actually have time to work on it now versus starting the process after you've already found a house. What a lot of people do is they go out and shop for a home and then they find out whether or not they're qualified to buy it. Don't do that. Start where you're supposed to start. Talk to a lender earlier in the process. Let them run your credit. Let them look at your income. Let them figure out exactly where you are. Tell you how much home you're qualified to purchase so that when you're ready, you know exactly where you should look. Now, if you're watching this, you're not sure where to start, my team and I would love the opportunity to guide you through that process. We've helped hundreds of people here on YouTube, and you can reach us using that link in the description of this video. Now, at the moment, I don't believe there's a rush to go out and buy a house. You're not going to get left behind if you don't go buy a house today. In fact, you should never be in a rush to buy a house. But I do think you should be prepared for a competitive housing market. Even though it's going to be a little bit more buyer friendly, you should expect to have competition out there. You should expect multiple offers in some situations. But at the end of the day, you can't control any of that. You can only control making sure that you're financially prepared for the opportunity when it presents itself. Now, here's the thing. I'm excited about 2025 because I believe it's going to be a lot more friendly for you as a buyer. But if you think 2025 is your year, do me a favor and let me know in the comments.